Welcome back to Fast Money. Some trouble in tech land. The S&P and Dow able to hold on to gains after yesterday's sell-off, but the tech-heavy NASDAQ couldn't quite cut it. And our next guest says the rollover is just beginning. Let's bring in Rob Sluymer of RBC Wealth Management to chart it out. Hey, Rob, what are you looking at?
Hey, Melissa. Thanks very much. Well, let's start with the 10-year because that's really what's driving everything here, at least from a tactical standpoint. I think the key point is when we look at these swings that we're seeing in equity and fixed income markets, from my perspective, they're still moving in very normal 1 to 2 quarter shifts. It's not unusual to see a market move from a fairly overbought level like we saw with the 10-year bond yield at the beginning of the first quarter to relatively oversold coming into the summer months and bottoming. So the move by the 10-year above that 138 level certainly caused some gyrations in other risk assets, notably technology. But in the very short term here, I think at this 153, 155 level, rates are probably going to pause. That's roughly a 62% retracement of the move or the decline that we had through the second and third quarters. So I think rates pause here. I think some of the stress that we've seen on technology probably is alleviated in the short term. But the key point here, when we look at these longer term charts, look, tech outperformed for a couple of quarters, had a tremendous surge in the second and third quarter, and is starting to pause here. So I want to be very clear. We're not alarmed about what's happening in technology. It just needs a rest. And if you contrast that, say, for example, looking at the XLK or the IGV, the software ETF, all of these have had very big runs. They've led the market, and now they're going through a bit of a rest period. It's not unusual to see that for a couple of months, couple of quarters even. And then when we contrast that, if you think about what the cyclicals have done, they peaked with the 10-year bond yield in the first quarter, went sideways to down for, call it 2 quarters, and many of them have caught up to their 200-day moving average. The banks are a very good example of that. Sure, they're a little bit overbought in the short term. There's probably some chop and some volatility here, but it looks to me that a lot of these cyclicals that have been correcting for the last 2 quarters are now set to move higher. So I think the leadership in the fourth quarter is likely in the cyclicals. That doesn't necessarily mean that tech rolls over and dies. I don't think this is a long-term call, but I think it underperforms and is really just into a pause mode here.
So if the rollover in tech, Rob, is not a long-term call and it's just simply resting and presumably going to wake up, does that mean that this is a short-term call on cyclicals and specifically banks?
Well, I guess it depends on the time frame we're talking about, but I think of this as more of an intermediate-term time frame, 1 to 2 quarters in duration. So I think from a trading standpoint, there's still substantial upside in a lot of the cyclical names, whether that's airlines or banks or the reopening trade. Whereas I think tech, which led as rates and the growth scare was in place, that's probably more of a pause. Think back to last year coming into September, how many people were calling for a major peak in technology. It just looked like another tactical peak or a pause in tech going into the fourth quarter. I think we're looking at something similar this year as well.
Rob, good to see you. Thanks for the charts. Rob Sluymer.
Thank you.
Guy, were you surprised at the lack of bounce in tech today?
Not surprised. I mean, 10-year, listen, the 10-year hung in there. At one point today, I think it was back up at that 155 level. So, it's, again, we talked about, did it make sense? Yeah, it sort of made sense. If you do think that rates are going to stall here, look at some of these names, some of the sell-offs. I mean, AMD is at a 20% sell-off in about, actually less than a month. NVIDIA, 10% sell-off. So some of these names are getting attractive again, especially if you think yields are topping out. Unfortunately, I'm not one of those people. I still think yields have some room on the upside, so I still think there's some downside pressure on some of these high valuation tech names.
Karen, did you buy Facebook today?
I did not buy Facebook today, but I was, I think of tech as not just a monolith, sort of the high flyers and what I think of as the value names. So I'm still, long Facebook, Google, Microsoft, Apple, Amazon, all of the, not Netflix. And short the IGV, and I think that will continue to work with rates here or higher.
Yeah, I mean, high valuation stocks would be threatened, and then you had Warby Parker's debut, Tim, which did quite nicely at not a low valuation.
Look, there was a time when I thought wearing a pair of frames with clear lenses looked cool, even if I didn't need the glasses. Embarrassed to say, nah, I didn't really ever do that. But there's 19 eyeglass stores within a 5-block radius in my neighborhood. I don't understand it, and I think it's This to me feels very, very frothy, especially when you get to a place where at some point I think you do have a consumer that is going to be running into some problems well into next year. So look, I get that this is a hot place to be right now. This is not one I'm chasing.